Most traders believe more equals better. More strategies, more indicators, more markets, more trades. But the traders who consistently maximize their profits don't do more, they do less, and they do it better. That's the power of specialization. If you look at nearly every high-performing trader over the long term, you'll notice something interesting. They don't trade everything. They don't chase every opportunity. They don't constantly switch systems. They specialize. They master one setup, one market, one time frame, one edge, and they execute it relentlessly. Specialization is powerful because it reduces decision fatigue. Every time you switch strategies, you reset your learning curve. Every time you jump to a new market, you dilute your experience. Every time you add another indicator, you add confusion. Maximizing trading profits isn't about finding more opportunities. It's about extracting maximum value from a narrow edge. Think about professionals in any field. A heart surgeon does not also perform brain surgery. A professional athlete does not also perform brain surgery. A master craftsman does not attempt to master every trade simultaneously. They specialize because depth creates precision. Precision creates consistency. Consistency creates profit. In trading, depth means you understand your setup in different market conditions. You recognize when it's strong. You recognize when it's weak. You recognize when it's weak. You recognize when to step aside. That kind of awareness only comes from repetition. And repetition only happens through focus. Most traders never reach high levels of profitability because they are constantly distracted. One week they trade breakouts. The next week they trade reversals. Then they test scalping. Then they switch to swing trading. They are always learning, but never mastering. Learning feels productive. Mastery feels repetitive, but mastery pays. When you specialize, something powerful happens. Your reaction time improves. You no longer analyze every candle emotionally. You recognize patterns almost automatically. You remove hesitation because you've seen the setup hundreds of times. That confidence is not emotional. It's earned through exposure. Confidence based on repetition is stable. Confidence based on repetition is stable. Confidence based on recent wins is fragile. If you want to maximize your trading profits, you must reduce variability in your execution. Specialization creates statistical clarity. If you trade 10 different strategies, how do you measure performance accurately? Which one is responsible for gains? Which one causes drawdowns? How do you refine what you don't isolate? When you focus on one strategy, data becomes meaningful. You know your win rate. You know your average risk to reward. You know your maximum historical drawdown. You know when performance deviates from normal. That clarity allows refinement. Refinement increases efficiency. Efficiency increases profit. Let's address the psychological side. Specialization reduces emotional noise. When you constantly change systems, every loss feels like uncertainty. You start doubting your strategy. You wonder if you should switch again. That doubt creates instability. But when you specialize, losses feel different. They feel statistical. Because you know the edge works over time, you've seen it play out. You've tested it. You've lived through its drawdowns. That emotional stability protects capital. Capital protection allows growth. Another major benefit of specialization is scalability. If you don't deeply understand your strategy, you will hesitate when increasing position size. Hesitation limits growth, but when you've specialized, scaling becomes easier. Because your belief is built on data, not hope. Maximizing trading profits isn't about hitting one massive trade. It's about building a structure you can scale confidently. And structure comes from specialization. Now consider market selection. Many traders jump between stocks, crypto, futures, forex. Each market behaves differently. Each has unique volatility patterns. Each has different liquidity characteristics. If you constantly switch markets, you never internalize their rhythm. Professional traders often specialize in one instrument. They learn how it moves during news. They understand its intraday behavior. They recognize subtle patterns others miss. That familiarity becomes an edge. Edge multiplied by repetition becomes profit. The power of specialization is not just technical, It's psychological. When you narrow your focus, your mind becomes clearer. You eliminate distraction. You eliminate constant analysis paralysis. You eliminate constant analysis paralysis. You eliminate unnecessary complexity. Simplicity compounds, complexity confuses. If you truly want to maximize your trading profits, ask yourself this: are you mastering something, or are you constantly searching? Because search mode feels active, but mastery mode produces results. Now let's go deeper. Specialization sounds powerful in theory, but here's the real question: what exactly should you specialize in? Because specializing in the wrong thing won't maximize profits. It will limit them. The first mistake traders make is choosing based on excitement. They pick the most volatile market, the fastest time frame, the strategy that looks the most impressive on social media. That's not specialization. That's stimulation. If your goal is to maximize trading profits, your specialization must be built on three things: repeatability, clarity, data. Repeatability means the setup appears consistently. If your strategy only appears once a month, you won't get enough repetition to build mastery. Clarity means the rules are clear. You must know exactly when to enter, when to exit, and when to stay out. If your rules are vague, specialization becomes guesswork. Data means you can track performance objectively. You must know your win rate, your average reward to risk, your historical drawdown, your expectancy. Without data, specialization becomes belief-based instead of evidence-based. Now let's talk about narrowing down. You don't need 10 setups. You don't even need 5. In most cases, 1 or 2 high-quality setups are enough. The key is understanding their behavior deeply. For example, if you specialize in a breakout strategy, your job isn't just to recognize breakouts. Your job is to understand bakeouts. Your job is to understand which time of day performs best, which market conditions favor continuation, which false signals appear most, and how volatility impacts your stop placement, how news events affect your stop placement, how news events affect momentum. That depth transforms a simple pattern into a powerful edge. Most traders stay at surface level. They recognize patterns visually, but they don't study their behavior statistically. Specialization forces you to study, and study builds conviction. Conviction reduces hesitation. Hesitation reduces profits. Now let's talk about time frames. Jumping between multiple time frames. Jumping between multiple time frames creates confusion. One day you scalp on the 5-minute chart. Next day you swing trade the daily chart. Different psychology, different patience requirements, different risk exposure. That inconsistency prevents mastery. If you specialize in one time frame, you learn its rhythm. You know how long moves typically last. You know what normal pullbacks look like. You know when something is abnormal. That awareness increases precision. Precision increases efficiency. Efficiency maximizes profits. Let's move to risk management specialization. Many traders treat risk as flexible. They adjust size based on confidence. Hat destroys consistency. If you specialize in fixed risk parameters, something powerful happens. Your performance becomes predictable. Your drawdowns become manageable. Your emotional state stabilizes. And stability allows you to scale safely. Scaling without specialization feels dangerous. Scaling with specialization feels logical, because you understand your numbers. Now here's a critical mindset shift. Specialization does not mean limitation. Many traders fear missing opportunities. They believe if they only trade one strategy, they'll miss other moves. But chasing everything leads to mediocrity in all areas. Focusing on one edge leads to dominance in one area. And dominance is more profitable than scattered participation. Think about it like this. Would you rather have average knowledge of 10 strategies or expert level knowledge of one? Expert level execution produces higher returns, because expertise reduces mistakes. Mistakes reduce profits. Now let's address refinement. Specialization is not static. It evolves. As you gather more data, you refine entry rules. You refine stop placement. You refine trade filters. You refine risk adjustments. Small refinements across hundreds of trades create significant long-term improvement. That's how profits are maximized, not through dramatic changes, through incremental optimization. But optimization only works when you isolate variables. If you constantly change strategies, you never know what actually improved performance. Specialization isolates variables. Isolation allows optimization. Optimization increases expectancy. Expectancy compounds into wealth. Now let's talk about emotional energy. When you specialize, your mental load decreases. You don't wake up wondering what to trade. You already know. You don't scan 20 markets. You focus on one. You don't debate strategy changes daily. You execute. Educate mental clutter increases clarity. Clarity improves decision quality. High-quality decisions protect capital. Protected capital grows. Most traders exhaust themselves mentally. They constantly analyze new systems. They consume endless content. They backtest random ideas. They never settle. And because they never settle, they never build depth. Depth is required to maximize profits. Surface-level understanding produces surface-level returns. In the final part, we'll bring everything together. We'll talk about how specialization directly impacts scaling, long-term equity growth, and why most traders sabotage profitability by refusing to narrow their focus. Matters. Maximizing profits over the long term. Because specialization isn't just about becoming better. It's about becoming scalable. And scalability is where serious trading income is built. Most traders never reach meaningful account growth because their approach is unstable. They constantly adjust strategies. They rotate markets. They tweak rules emotionally. That instability makes scaling dangerous. If you don't deeply understand your edge, increasing size feels risky. And when increasing size feels risky, hesitation appears. Hesitation leads to inconsistent execution, limits profit potential. But when you specialize, scaling becomes logical. Because you know your numbers, you know your average drawdown, you know your historical performance during volatile periods, you know your edge holds up over time. That knowledge removes fear, and fear is one of the biggest blockers to maximizing profits. Let's talk about equity curves. A trader who constantly switches strategies usually has a chaotic equity curve. Sharp spikes, sharp drops, no clear structure. A trader who specializes often has a smoother equity curve. Controlled drawdowns, steady growth, predictable behavior. Predictable behavior, predictability LDE, ed ends, confidence built on data, not emotion, allows gradual scaling. Gradual scaling multiplies profits safely, and safe multiplication is the real path to maximizing trading income. Now let's address something important. Maximizing profits does not mean maximizing trades. It means maximizing efficiency. Efficiency comes from doing the same thing better over time. When you specialize, you eliminate unnecessary experimentation. You stop wasting capital on low-quality setups. You stop spreading attention across multiple markets. You reduce random exposure. That concentration increases your statistical advantage. And statistical advantage is what produces consistent returns. Think about professional fund managers. They don't trade everything. They focus on specific sectors, specific asset classes, specific models. Why? Because capital demands discipline. The larger the capital, the more controlled the strategy must be. If your goal is serious profitability, you must think like someone managing serious capital. And serious capital demands specialization. Let's examine opportunity cost. Every time you switch strategies, you reset your momentum. You go back to testing mode, back to uncertainty, back to inconsistency. That lost time has a cost. Time is part of compounding. If you spend years experimenting instead of mastering, you delay growth. Specialization shortens the learning curve. It accelerates skill development. Skill reduces error increases net profit. Now consider emotional resilience. When you deeply understand your edge, drawdowns feel different. They don't feel catastrophic. They feel temporary because you've seen them before. You know the recovery pattern. You know your system's historical behavior. That stability protects you from abandoning profitable strategies during normal downturns. Most traders lose money, not because their system fails, but because they abandon it too early. Specialization builds conviction. Conviction builds patience. Patience allows edge to play out. Edge playing out builds profit. Let's also talk about compounding focus. When your mind isn't scattered, improvement compounds faster. You recognize micro patterns. You refine entries by small margins. You improve timing. Those small improvements repeated over hundreds of trades create massive long-term impact. But that only happens when you concentrate on one thing. Wide focus produces slow growth. Narrow focus produces exponential growth. Maximizing trading profits is not about chasing opportunity. It's about dominating a specific opportunity repeatedly. Now here's the final mindset shift. Specialization requires humility. It requires accepting that you don't need to trade everything. You don't need to be involved in every move. You don't need to prove versatility. You need consistency, and consistency thrives in simplicity. If you want to maximize your trading profits, simplify your approach. Pick one strategy. Pick one market. Pick one time frame. Track it, refine it, master it, execute it relentlessly. Over time, depth turns into dominance. Dominance turns into confidence. Confidence built on data turns into scale. Scale turns into serious profit. That's the power of specialization. It's not flashy. It's not exciting, but it's effective. Most traders search for the next edge. Few commit to mastering the one they already have. If you want to maximize your trading profits, stop searching, start specializing. Because mastery, not variety, is what builds wealth in trading. And once you understand that, your entire approach changes. Let's take this one level deeper. Because specialization is not just a strategy decision. It's an identity decision. When you choose to specialize, you are choosing to stop chasing. You are choosing to stop reacting. You are choosing to stop being distracted by every new method that promises better returns. That decision alone separates serious traders from the majority. Most traders operate in what I call constant optimization mode. They believe there is always something better, a better indicator, a better indicator, a better entry technique, and that belief keeps them average. Why? Because when you're constantly optimizing, you never fully execute. You hesitate. You question signals. You doubt performance during normal drawdowns. You interrupt compounding. Specialization removes that noise. It allows you to fully commit to execution. And full commitment is what allows performance to mature. There is something powerful that happens after 200, 300, 500 trades in the same strategy. You stop thinking so much. Your pattern recognition sharpens. You anticipate behavior instead of reacting to it. You feel the rhythm of the market, not emotionally, but statistically. That level of familiarity creates an edge most traders never experience because they never stay in one place long enough. Now let's connect this directly to profit maximization. Profit maximization is not about squeezing more trades. It's about squeezing more efficiency from the same edge. When you specialize, your average mistake size decreases. Your entry precision improves. Your entry precision improves more calculated. Your position sizing becomes more calculated. Your expectancy increases slightly. And here's the key. Small improvements in expectancy create massive long-term impact. If you increase your average expectancy by even a small fraction over hundreds of trades, your equity curve changes dramatically. That doesn't come from switching systems. It comes from refinement within one system. Refinement requires stability. Stability requires specialization. Now see, consider this from a business perspective. Trading is not gambling, it's performance management. And every high-level performance discipline operates on specialization. Elite athletes don't train randomly. Surgeons don't perform random procedures. Engineers don't design everything. They specialize because complexity demands focus. Markets are complex, so your response must be focused. The traders who attempt to master everything remain mediocre. The traders who master one domain become dangerous. Now let's address scalability at higher capital levels. As accounts grow, liquidity and execution precision matter more. You cannot operate emotionally with larger size. You cannot hesitate when managing serious capital. You cannot constantly change approach when real money is on the line. Specialization builds the confidence required for scale. It builds the track record required for conviction. It builds the data required for calculated risk increases. Without specialization, scaling feels like guessing. With specialization, scaling feels logical. And logic is what protects capital. There's also something psychological that happens when you specialize. Your confidence stops being emotional. It becomes structural. You don't feel confident because of recent wins. You feel confident because your system has proven itself over time. That kind of confidence is calm. It's controlled. It's sustainable. And sustainable confidence is what allows profit to expand. Now, here's the hard truth. Specialization requires discipline. It requires ignoring new shiny systems. It requires staying focused when others claim there's a faster way. It requires patience during drawdowns. It requires trusting data over emotion. Most traders don't fail because they lack intelligence. They fail because they lack commitment. Commitment to one edge. Commitment to one structure. Commitment to long-term refinement. If you truly want to maximize your trading profits, you must shift your mindset from exploration to execution. Stop exploring constantly. Start executing consistently, because consistency multiplied by time equals scale, and scale equals profit. The power of specialization is not in what you add. It's in what you remove. You remove distraction. You remove uncertainty. You remove emotional volatility. You remove complexity. What remains is clarity. Clarity leads to precision. Precision leads to efficiency. Efficiency leads to higher net returns. That's how you maximize trading profits. Not through constant change, through focused repetition. Master one thing deeply. Refine it relentlessly. Track it objectively. Scale it gradually. And over time, what looked simple becomes powerful. That's the power of specialization. It doesn't promise fast money. It builds real money. And real money is built by those who commit, not those who constantly search.